Welcome to Trading Nation. I'm Courtney Reagan. A longtime market forecaster expects Treasury yields to fall and put some mojo back into stocks. Jim Bianco is the president of Bianco Research. Welcome here, Jim. What is your near-term forecast for the 10-year yield? Been getting an awful lot of attention lately.
Yeah, the near-term forecast is it's oversold, and it's probably due for a rally. We would have falling rates. Maybe you could see it fall all the way back to 150. But I wouldn't consider that anything more than a respite in a move for longer term for higher yields. So I know people will think that that is a relief, and the stock market will definitely act like it's a relief. But I don't think that that will be the end of the day or the end of the game when it comes to the rise in rates.
Okay, so you're saying that if yields take a breather, that stocks, at least initially, will have a nice reaction to that, but perhaps we shouldn't count on it lasting?
That's correct, because I think that the trend towards yields has been a push-pull all year long between why yields are going higher. I know a lot of people want to believe that it's about that the economy's reopening and the economy's getting strong. We know that, and that is a big part of it. But is there another part of it that's about a fear of overstimulation with the economy reopening and all of the extra money that everybody's been given that will produce inflation in the second half of the year? If that's behind the rise in rates, then I don't think the market will take it very well. For now, it's just a discussion about inflation. For now, it's about real growth. And that's why I think the stock market will take it fine for now. But the second half of the year, if we continue to see higher rates and more talk of inflation, then it could run into trouble. But we're not at the second half of the year right now.
All right, but let's go there. Maybe we've got some longer-term investors that are watching this program. So how high do you think that the 10-year yield could go, say, over the next 12 months, rather than just talking short-term?
I think we could hit 250 over the next 12 months. So about 75 basis points higher as well. That will come about because of a combination of a strong reopening in the economy, which will naturally raise interest rates, and a fear or maybe some reality that inflation, something we haven't seen for 25 or 30 years, is actually returning to the system, and a fear that it will stick around for a little bit of time. It's an old saying in the bond market that yields rise and they don't stop rising until something breaks. Now, something breaks doesn't have to be a correction in the stock market. It can be like September 2019 when you had a plumbing problem with the repo market, or it can be like 2013 with the taper tantrum and that you broke the Fed and forced them to change policy. But it would be rare to see a rise in rates like this to just find some level, just stop, reverse for several months, and everybody say that peak in yields didn't mean anything. Usually it keeps going until it causes something to break or change.
Well, 2.5 is certainly higher than where we're sitting right around now. You mentioned inflation earlier, and we've been living in a period of relatively low inflation for some time. So when should we think about the other way around? When could inflation concerns actually become a real problem for the market?
Probably not until the second half of the year, because over the next 3 or 4 months, what we do know is what the economists call a base effect. We're going to be dropping off March and April's inflation data from a year ago. So the inflation numbers will go higher. Everybody knows that's going to happen. So that shouldn't change anybody's opinion. We also know that stimulus checks, $1,400 checks, are hitting bank accounts today, literally today, right now. By Monday, President Biden said 100 million checks will be in the mail. So when you get to the second half of the year, we will be beyond that base effect. We will have some idea of what that stimulus money is being spent on. And then we will, in earnest, have that inflation discussion. So for the next few months, if you're worried about inflation, you're going to get nothing to change your opinion. If you're not worried about inflation, you're going to get nothing to change your opinion. So we're going to just have to wait and see where the next set of data brings us, probably around the later part of the summer.
That makes sense to me. We're going to have you back, I'm sure, so you can help us follow how things do play out in the near term and the longer term. Thank you for joining us today. And thank you all for watching Trading Nation. I'm Courtney Reagan. We'll see you next time.